Yo, what's up guys? Welcome to Mango Monkey Learns Money. Today we'll be going through the recent annual general meeting presentation from Prospa. This is an ASX listed company with ticker code PGL. Their share price went up 6% when the AGM presentation came out, and it went up 38% over the last month. Prospa provides unsecured business loans to Australian small businesses. And when I say unsecured, I mean the loan is not secured by the customer's residential property, so the business owner does not need to be afraid of losing their home, etc. How Prospa is different from the bank is that they provide very quick turnaround. Most of their loans can be funded within 24 to 48 hours. And the assessment is based on the business bank statements. That means there's no need to provide tax return. Their loans have a very high net interest margin. The interest rate is very high. It's something like 20% to 40% per annum. But at the same time, they also have a higher loss rate compared to a loan from the bank. Prospa is one of the companies I recently started to follow. It is a small company, it's not in the ASX 300 index, and that means this has a high risk. Plus, I'm not a qualified financial planner, so you should be really careful if you do decide to invest into Prospa. I'm just a Santa Claus on YouTube. My most recent purchase was at 70 cents per share, and I sold my Prospa shares a couple of months after I purchased them at 78 cents per share. I'm actually looking to buy again, so my video today may be a little bit biased. But anyway, with the disclaimers out of the way, let's take a quick dive into Prospa's recent annual general meeting presentation. So what am I looking for? I'm looking for 5 things. Number 1 is Prospa losing money due to the coronavirus pandemic because the customers are not paying their loans. Number 2 is Prospa able to maintain their loan origination and their revenue, or have they become so tight that they are declining all the loan applications? Do they even have customers who want to take a business loan? Or do the customers prefer to get free money from the government? I mean, if I'm a business owner these days, I honestly prefer to stay at home and sleep and get money from the government for free, because if I'm not sure about my business future, I would rather not take on a debt and just get free money from the government. If anything, I will close up shop and just collect job seeker. The third thing that I want to look at today is whether Prospa has had to reduce their interest rate in order to attract more customers. The fourth thing is whether Prospa is actually profitable. And the fifth and final thing is I want to know about the general economy right now, whether the economy will be doing well or not going forward. Now let's look at these questions one by one. To answer the first question, which is whether Prospa is losing money, I'll look at this chart from the AGM presentation. According to this chart, there is a 70% reduction in the COVID-related loan deferrals from the middle of May until the end of September, which is a good sign. The static loss rate seems to have stabilized at between 4% and 6%, so that's another good sign. Although at this stage we don't know yet whether there will be more losses going forward from the recent loans that they funded. Now there's been a 7% increase in their premium customers year on year up to 30 June 2020, reflecting the fact that Prospa is declining more of the bad customers and approving more of the really good customers. This change started a while ago. It started before coronavirus actually existed. And hopefully this means the loans that they started in the last 1 or 2 years are not going to go bad. I also like the fact that their recent loans have been to the professional services industry, and there's not too much hospitality customers that they took on recently. Now to answer the second and third questions, which is whether Prospa has been able to maintain their revenue and loan origination, and whether Prospa has had to reduce their interest rate to maintain their customer base, I'll look at this chart, which is also from the AGM presentation. According to this chart, loan origination has increased 32% year on year if we only look at quarters 1, 2, and 3 of this financial year compared to last financial year. Why would we do that? It's because quarter 4 is between April and June, and this is when the coronavirus pandemic started. So during this time, Prospa and many other lenders deliberately slowed down their loan origination. They decided to not approve loans which are a bit risky. They only approve loans which are for the gold brick customers. Now if we look at this chart, we can see that their revenue still increased year on year, but the increase is a bit smaller compared to the increase in the loan origination. This is probably because Prospa had more and more premium loans which are a bit cheaper compared to their standard loans, but it's still a decent growth in revenue. Now question number 4 that I had for myself today is whether Prospa is actually profitable. I'm not sure why, but it looks like Prospa is not really profitable. I have no idea what they have been spending on, but in the 2020 financial year and also in the 2019 financial year, Prospa was losing money both years. So this wasn't because of coronavirus, because coronavirus wasn't there 1 year ago. It's just because Prospa spent too much. Now Prospa's loans are generally 1-year loans, so the transaction cost for Prospa to earn a certain amount of revenue should be the same from 1 year to the next year. They have recently started to have more and more of 2-year loans and 3-year loans, but from my understanding, the majority of their loans are still 1-year loans. Because they are 1-year loans, there's not really passive income or anything like that. Every single year they need to spend more money to attract more customers and spend more money to pay their staff members to assess the loan applications. So Prospa needs to somehow lower down their operating expenses so that they can turn into profitability. Now question number 5 is what gets me really frustrated today. What's the general outlook for Australian businesses? Well, the outlook is very uncertain. There's a huge risk in running a business right now. A week ago in Adelaide, a kitchen hand managed to cause the whole state to go into lockdown. So this guy lied to the contact tracer, and as a result, because of what he said, everybody decided to lock down the whole state of South Australia. Thousands, if not millions, of lives are impacted by this guy, by this one ordinary guy in Adelaide. How can one person, one ordinary person, a nobody, cause the whole city to go into lockdown? That's just crazy. This means as a business owner in Adelaide, the survival of my business depends on a random person.
Any random person can destroy my business.
So this is a very large risk, both to the business owner and also to Prospa, which lends money to the business owner.
How do we know that next week there will not be another guy like him?
So there's a sushi train near my home. It was doing okay, maybe not the best, but it was doing fine. But one of their patrons had coronavirus. And since then, nobody goes there anymore, and the sushi train closed down. Alright, we have vaccine, it's already out. Why are you worried still? Well, the vaccine may be out, but you cannot get it yet. It's probably still at least 6 months away, if not 1 year plus, before we see mass production. So during that time, there are still many opportunities for another silly guy like this guy in Adelaide to cause my city to go into lockdown and for my business to be bankrupt. Honestly, I don't think Australian businesses can survive another lockdown, especially the businesses who needed a business loan to begin with. Even the ones that do not need a loan may end up being bankrupt. So if you need a loan to begin with, then it's almost certain that your business will be bankrupt if there is another lockdown. Another thing I want to mention today is that Australian businesses currently are able to trade whilst insolvent. Usually the directors of a company are held personally liable if they knowingly continue to trade and operate their business while they are insolvent. In other words, if the directors knowingly continue to trade, knowing that the company most likely cannot pay all their debts and their suppliers and stuff like that. But now the government said, no, don't worry, you can keep trading. No consequences for you directors. So because of this, a lot of bosses continue to trade. There's no sense of personal accountability anymore. There is no need to exercise self-control. Let's just gamble it away. Let's gamble our money away. Let's gamble the money of our creditors away. The money of our suppliers. There's no consequences for us. Let's keep running our business. So a lot of these bosses continue to request extended payment terms from their suppliers, maybe even apply for a loan to Prospa, and they continue trading, knowing that they are losing money every single day. These days it costs a lot more to run a business. There will be more operating costs. If you have a retail shop, you have to pay someone to be the guard, to measure the temperature, to provide face masks. And some of your orders take a long time to arrive from your suppliers, so you may find that by the time your orders arrive, the customer cannot wait anymore, so they cancel their orders, but you're stuck with the inventory from your suppliers. So will I buy Prospa at the current price today? When I buy Prospa, I want to have a little bit of a margin of safety. Currently, Prospa's price to book ratio is about 1.2. I want it to be below 1.0. Because even an extra 1% of customers who do not pay their loans will erode Prospa's book value significantly. Prospa's equity multiplier is around 3, so this means for every dollar of net asset that they have around $3 of loan receivables. So any credit losses are amplified by a factor of 3. So with this in mind, I'm going to wait until Prospa's share price drops further to something around 60 cents or 70 cents, and then I'll buy again. Did you enjoy this video today, guys? If you do, please remember to hit the like button for me so YouTube likes me a little bit more. Happy holidays from your Santa Claus. Thank you for watching.